So good morning everyone. Today our topic is property, plant and equipment Ind AS 16. This is a very important standard at your level. Ind AS 16 property, plant and equipment. So what is property, plant and equipment? So which is nothing but already you have seen this standard in accounting standards also. So accounting standard 10 deals with fixed assets, as you know that. Okay. So the related aspects of tangible assets, what we are dealing already we have seen in accounting standard 10, the same thing that we are going to discuss as per new Ind AS 16 property, plant and equipment. Okay. So here, in order to understand this standard, first of all, we need to go with with the elements. So what is relating to the assets? So our current topic that we are discussing about Ind AS 16. Ind AS 16, which deals with property, plant and equipment. Property, plant and equipment. Okay. So what is this standard, sir? Property, plant and equipment. So as per accounting standard, we are having AS 10. Initially, we are having accounting standard 10, which deals with fixed assets. And before that, we are having accounting standard 6 also, which deals with depreciation, So then on, they released accounting standard 10 revised. So accounting standard 10 revised means it inclusive of fixed assets as well as depreciation. So as per the new that we are having accounting standard revised, AS 10 revised, fixed assets and depreciation together we are having. And now we are going to discuss about property, plant and equipment. In this property, plant and equipment also, the aspects relating to the fixed assets will be there and the aspects relating to the depreciation also will be there. So here property, plant and equipment, so Ind AS 16, so generally deals with the fixed assets as well as the depreciation. Okay. So in order to going the topic, before that, once you check, so what we know about the basics relating to goods and assets. So what do you mean by goods and assets, Nana? What is meant by goods? What is meant by assets? What is meant by goods and what is meant by assets? So generally in our language, if you check, okay, if you go for any mobile store like Apple store, you went. When you went the Apple store, you can see all the iPhones, iPads, or whatever it might be, MacBooks, and all the things. Why they kept in the Apple store? In order to sell. In order to sell, they kept all the items of Apple products in the store. So in the store, so we're having all the kinds of Apple products, just like iPhones will be there, MacBooks will be there. So whatever it might be, iPads will be there and all. So here, this all they kept in the store for what, Nana? For sale. For sale, if they kept all these things, these all products are goods for that organization. These all products are goods for Apple company. Okay. So in the Apple store, we are having iPhones, MacBooks and iPads that is for sale. That is held for sale. For held for sale, if they kept, we are consider it as goods for them. In the same Apple store, you can see some furniture. In order to design, okay, they have to keep in order to features and all the things in order to display that. You can see some televisions in that, okay, and some furniture, televisions, displays, this all the things that are not held for sale, for continuing course of business. They are using some of the things that we call it as assets for them. Okay, in a simple language, if you go to the store, Apple store, all the iPhones and MacBooks and iPads which is held for sale, that will be represented as goods, and what they are using to sell that goods, okay, generally the furniture, for the customer comfort, furniture they will keep, and in order to display the features of their products, they will display some televisions and all. These all are assets for them. These all are assets for them. In a broad way, when we are going up, so goods is nothing but they are meant for sale. They are meant for sale and not to stay in the business. Okay. In simple language, when we are going with that, what is the difference between goods and assets? So check it out. Goods are, they're not meant for stay in the business for long term. They are not meant for stay in the business for long term. So they are meant for sale. That means immediately. So whatever they're having the goods, they will use it to sell to the products, sell that products to the customers. So it is not meant for stay in the business for long time. But assets are meant for stay in the business for long time. So it is meant for stay in the business for long term. Because they are using the assets in the business in order to run the operational activities. Okay, they are using that assets in the business in order to run the operating activities. So goods they kept for sale only. Okay, in a simple way we can say the goods are not meant for stay in the business for long term. What is the purpose here? It is a purpose, to generate revenue. Goods are held for the purpose to generate revenue. So how you will generate the revenue from the goods is simple. We can sell the goods by sale of goods. By sale of goods, you are generating the revenue. Okay. By sale of goods, you are generating the revenue. So that is meant for the goods. Okay. While coming to the assets, it is a process to earn revenue. Assets are held and it is a process of earning revenue. Okay. So just like example, as I told you, some displays the features and all the things in order to get more sales. And for the customer comfort, they'll keep some furnitures in it. And these all the things are in the process of generating the revenue. Okay, in a simple way. Okay. And it is not for sale. Assets are not for sale. They want to use it in the business and they are not meant for sale. So relating to the goods, we have a separate standard in accounting standards. Also, we are having AS2, valuation of inventories. So here we are having Ind AS2. Ind AS2, Indian Accounting Standard 2 we are having. So that deals with the goods, inventories. Okay. And relating to the assets, we have different standards. So I will tell you one by one. First of all, what is meant by an asset? Now you understand the point. What is the difference between goods and assets? Goods are not meant for stay in the business for long term, but assets are meant for stay in the business for long term. And goods are the purpose to generate revenue, and assets are the process of earning revenue. We are using the assets. And how do you generate the revenue through goods? By sale of goods. And assets we are not selling. It is not for sale. And coming to what is meant by an asset? What is meant by an asset? So asset consists of majorly three parts. Asset consists of majorly three elements. Okay. So what is meant by an asset? It simply we can say it is resources owned by an enterprise or entity. Is the resources owned by an entity. Owned by an entity. They purchased and they are owned by an entity. So the entity is the owner for all the assets. Okay. Excuse me. So now asset consists of majorly three elements. First of all, a right. Right. And second one, we are having control. And third one, we are having assets are producing future economic benefits. So assets are consist of majorly three key aspects. So what are the main aspects here? It will create a right and control over the assets. At the same time, they are producing the future economic benefits. Sir, how it will be a right? Simply, we can see what are the rights will be created by the assets. So right to receive cash. Right to receive cash. For example, you know well known about credit sales. When you are making credit sales, the other person is your debtor. Debtor is an asset side you are writing as a current asset, so which is nothing but you have a right on the debtor to receive the cash in the future. So here asset consists of right against any party to receive the cash. Right against to receive the cash. You are having a right to receive the cash. We can call it as asset. Okay. So not only cash, Nana, right to receive the goods, right to receive the goods and the services also. Right to receive the goods and services also. Credit purchases you make. Okay. So you have a right to receive the goods from the creditor, and services means services, whatever the thing. The business consists of goods as well as services. That is the first right you are getting. And second one, we are having right over, and second one we are having right over physical objects. Right over physical objects. So what is the right over physical objects? For example, if you purchased a car for using for yourself, if you purchased a car for using for your personal purpose, so you have all the rights against that car. If you want to sell the car, you have the right to sell, and if you want to use the car, you have the right to use because you are the owner. So that means here the assets means we have right over the physical objects. Just like for a company purchasing a plant and machinery, or company purchased a land and a building, so they are having a right. They are having a right over that physical objects. The company only having the right for them. What right they are having, the sir? So they have right to sell, they have to right to give mortgage or whatever the thing. So all the rights they are having that. Okay. Physical objects, like simply we can write property. Physical objects like property, plant and equipment. Property, plant and equipment. So right to receive the cash is one right. And while coming to physical objects, right over the physical objects, right over the properties, plants and equipments of a company. Simply, if you purchased a machinery and you have all the rights to use the machinery, you have rights to sell the machinery, or if you want loan, you kept your machinery. Okay, you kept your machinery as a lease holding, whatever the thing, as a what we call as a mortgage or pledge into the bank, and you can raise the loans. At the same time, if you want to give your asset for lease, so that right also you are only having because you are the owner of that particular asset. Okay, that is the third one we can write down here. So we have, what are the rights, Nana? Right to use, right to use, or right to sell, or right to give lease. Okay, right to give lease. So these all are the rights that you are having. Okay, or pledge also, you can pledge the asset to get the loans. Pledge and mortgage, you know, no? So that is the thing, you are pledging the asset into the bank and you are raising the loan. Okay, so what is meant by that? Okay, if you are not able to pay back the loan, they will take your asset. Simple. Okay, so next one, last one, right over intellectual property rights. Intellectual property rights, just we are having the patent rights, copyrights, whatever the thing, right over intellectual property rights. So it is your intangible assets. Intangible assets, for example, if you what we call it as, for example, you can say you have some patent rights. Okay, one formula you generated and you have taken a patent right against it. No one have to use that formula until you give the permission. So that means it is an asset for you. You have all the rights against that asset, that we call it as intellectual property rights. Intellectual property rights is nothing but patents, copyrights, trademarks. You are only the owner. You are only the owner for that. So you have all the rights over a particular intangible assets. We can call it as intellectual property rights. So what are the rights we are having on the asset, Nana? So here we have right to receive the cash, it is asset. Right to receive the goods and services, it is asset. You have a right over the physical objects like property, plant and equipment. If you purchase the plant, if you purchase the equipment and you are the owner, you have all the rights against that particular assets. At the time you can use, if you want to use, you have all the rights to use the asset, you have all the rights to sell the asset, you have all the rights to lease the assets to other parties, and you have all the rights to pledge the asset while granting the loans or while acquiring the loans. At the same time, we have all the rights over intellectual property rights also. That also we can call it as assets, like intangible assets. Intangible assets. So that we will discuss the bifurcation later. And coming to control, this is the important element in property, plant and equipment. Okay. So what is control? You have control over the asset. Sir, I am the owner of the asset. Okay. If I am the owner of the asset, I only have the control over the asset. No. Okay. Yes, but sometimes the substantial owner is also having the control over the asset. Okay. Example like lease, Nana. Leases. So have you heard about the concept called substance over form? Substance over form of a transaction. Substance over form of a transaction. For example, some lease arrangements are there. You know that the parties of the lease, lessor, lessee. Okay. The person, we call it as lessor and lessee. So who is the lessor? Lessor is the person, he is giving his asset for lease. He is giving his asset for lease to the other party. We can call it as lessor. So can I say he is the owner of the asset? Owner of the asset. Lessor is the owner of the asset. And here we are giving the asset for lease to the other person. So who is lessee, Nana? The person who takes the asset for lease. The person who acquire the asset for lease, he is called lessee. So can I say lessee is the user of the asset? Okay. So you have an asset, you are giving your asset for lease. Okay, you are the lessor and the other person is lessee. Okay, as per the legal terms, you are the owner of the asset and the other person is user of the asset. User of the asset. So here the condition is that who is having control over the asset? Who is having control over the asset? Though you are the owner, but who is using the asset? Lessee is using the asset. Lessee having the control over the asset. Lessee having the control over the asset. So that means that asset, when he wants to record in his financial statements, lessee have to claim that. So which is nothing but you are preparing balance sheet and lessee also preparing the balance sheet. So now my condition is that you are giving some asset. We call it as machinery for lease. You are giving machinery for lease. This machinery is an asset for you, that means owner, or this machinery is asset for lessee, that is nothing but user. Means substance over form of a transaction is saying that substantial transactions have more power than the form of a transaction. Okay. In a simple way, machinery using means we are having depreciation. Depreciation. So who have to claim the depreciation? Lessor will say that I am the owner of the asset. I will claim the depreciation on my own asset. Lessee will say that I am the user of the asset. Because of me, the asset got depreciated. I will show the depreciation in my books of accounts. Sir, why they are arguing for that? Because when you show an expenditure of depreciation, automatically your profit will decrease, so as that your tax will reduce. Owner will say that I will show the depreciation expense and I will reduce my tax. Lessee will say that I will show the depreciation in my books of accounts and I will reduce the tax because I am using the asset. Means the here it's clearly stated that we are having substance over form of a transaction. That means who is the form? Legal form. As per legal form, who is the owner? Lessor is the owner. Substantial, who is the owner? Lessee is the owner. So substantial transaction have more power than the form of a transaction. Substance over the form. Okay, substance over the form. So in that conditions, lessee can claim the depreciation, which is nothing but lessee have to show this machinery in his balance sheet, and he will show the depreciation also. Okay, so substantial transaction have more power than the form of a transaction, which is nothing but here why we are discussing all these things. We want control. Who is controlling the asset? Lessee is controlling the asset. If you are controlling the asset, it is asset for you. So that is what the second one, substance over form. So who is controlling the asset is important. Okay, first one right, second one control. These two things should be there. Okay, right against whom and control against whom. So right against the owner, control against the substantial owner, that we have to check. Okay. Sir, I am not given my asset for lease. If I am not given my asset for lease, so I have all the control of the asset. So it is also mine. The right is mine, as well as control is also mine. Okay. So that we need to check. Okay. Who is having the rights and who is controlling the asset. Okay. Two are different aspects. Next one, producing future economic benefits. Future economic benefits means, which is nothing but by using the asset, either you can earn some revenue in the future or reduce some cost. Okay. So that means, what is future economic benefit means, by using that asset, either you can earn some revenue, either you can earn some revenue or reduce some cost. So that we call it as future economic benefits. By using the asset, for example, machinery. With this machinery, when you are using the machinery, what is the purpose of using the machinery? To produce the goods. After producing the goods, you are selling the goods and you are generating some revenue. That means you can earn some revenue in the future. Because of using of asset, you are earning some revenue in the future. It will be your asset. That will be considered as asset. At the same time, or reducing the cost, reducing some cost. Sir, what is reduction of some cost? For example, so when you are going to the college, through public transport, for example, public transport, so daily you are spending 100 rupees for public transport. Daily 100 rupees you are spending for public transport, for coming through bus. Okay. The fare of the bus and all the things that you have to change and you have to come. So in that conditions, so you are spending 100 rupees per day, 100 rupees per day. So instead of that, if you purchased a bike, you will reduce that cost of fare of bus. If you purchased a bike or if you purchased a bicycle, okay, so in order to coming to the college, so in that condition you are reducing some cost, variable cost. So every day that you are spending some amount for public transportation, no need to spend right now. That means you are reducing some cost by purchasing an asset. Okay. So that means that asset, that bicycle or bike that you have purchased, it will reduce your cost. It will reduce some cost. It will reduce some cost. Then only it will be your asset. Then only it will be your asset. Okay, that is what the thing. For example, if you have a lot of requirement of photocopies, whatever the thing, so we can say Xerox copies. So every time you are going to the Xerox shop and you are printing the papers, you are taking photocopies of the papers. Instead of that, if you purchase one Xerox machine for your company, okay, so then no need to go outside, no need to give outsourcing, no need to go outside to take the Xerox, because this asset reduces that cost. That means, here what I am trying to telling you, future economic benefits means it should earn some revenue to you or it should reduce some cost to you. Anyone. Okay. Either it can earn some revenue or it can reduce some cost for you, then it will be your asset. Okay. So in order to make asset, the conditions are, first of all, asset is nothing but these are the resources which is owned by an entity. These are the resources owned by an entity. And as asset consists of three key aspects, three key elements. What is the first element? We are having right. What is the right you are having on the asset is nothing but right to receive the cash or right to receive the goods and services. So if you are having the right, it is asset for you. And right over physical objects like property, plant and equipment. You have all the rights on the properties and plants and equipments or machinery, land and building, whatever it might be. So you have the right, then it is asset for you. And if you have that right, what you can do, Nana? You have right to sell, you can right to use that asset, you can right to give that asset for lease, and you can right to pledge that asset in order to procure the loan from the banks or any other financial institutions. Then also it is your asset. And right over intellectual property rights also, like intangible assets, patents, copyrights, trademarks. You have right over all the formulas in your company. So in that conditions, that is also an asset for you. That is also an asset for you. And secondly, what are the aspects required? Control. Who will control that asset? Okay. So generally the owner will control the asset. Okay. But in some conditions like leases, the substantial owner will control the asset. So if he control the asset, it is asset for him. He can show that asset in his financial statement. So who is controlling the asset is also important. Who is controlling the asset is also important. If you are the lessee, you are having the control of the asset, then you can show that asset in your balance sheet. Okay. And third one is producing future economic benefits. What is producing future economic benefits? Because of using of this asset, either you can earn some revenue or reduce some cost. Okay. You can earn some revenue by producing the goods from the machinery, and you are selling the goods and you are realizing the revenue. At the same time, or if any asset you purchased, because of that asset you reduce some cost, that variable cost, some cost you have reduced. Sir, you can say, sir, if I purchased a bicycle or bike, okay, the capital cost is more. Every day I'm spending only 100 rupees, sir, for public transportation. But if I purchased a bicycle, the cost of investment is high. But it is benefit for you in the long term. It is a benefit for you in the long term. It is not for a short while. So it is benefit for you in the long run or long term. Okay. So like that we need to check. Okay. So that is the element of this. So clear, Nana, what is meant by asset? Asset should have consist of right, control, and it should produce some future economic benefits. Future economic benefits. Why we are discussing of asset? Because goods, we have a separate standard called Ind AS 2. Now we are talking about asset based standards. Asset based standards. Okay. So here relating to property, plant and equipment, we are following Ind AS 16. We are following Ind AS 16. For that, what is the requirement? That basics I am going to discuss with you. So that is the thing here. Asset means we are having a right over the asset or control over the asset or producing future economic benefits. Okay, these three key elements should consist of assets. Okay, now we can go with the types of assets. So next we are going to discuss about types of assets. Now asset means already you know that elements. Now types of assets. What are the types of assets we are having? So majorly the assets are classified into two types. Already you know these assets, current assets and non-current assets. So what is meant by current asset? What is meant by non-current asset? We are going to discuss. Okay. So here, what is meant by current asset? General view current assets are the cash, the assets that we are realized into cash within a short period of time. Okay. So within 1 year, it is easily realizable. It is easily realizable. For example, like debtors we are having. So from the debtors, when you are collecting the amount from the debtors within 1 year, if you realized it, so it is your current asset. Non-current assets means it is not readily realizable into cash within 1 year. Okay, within 1 year you cannot convert that assets into cash. In general terminology, that is the thing. And while coming into the deep of current assets, okay, so we have some points relating to. First, we'll discuss about current assets. Then we are coming into non-current assets. Okay, so relating to the current assets. So relating to the current assets, the points we can write. It is expected to be realized. It is expected to be realized or consumed. It is expected to be realized or consumed or sold within normal operating cycle. So normal operating cycle means what here? Okay, for example, when you purchase the raw material, you are converting into the finished goods and you are selling the finished goods and you realized into the cash. That is one operating cycle. So generally within operating cycle, within normal operating cycle, you are expected to realize the cash. That means you are selling the goods and realize the amount, or consumed. You are using the assets for your, for example, like raw material, you are consumed in the process of production. At the same time, you are selling any kind of inventories, whatever the thing you are selling, the finished goods. Okay, so these all things are happening. It is expected to be realized or consumed in the firm or selling to the other parties within normal operating cycle, so then those assets are current assets. Those assets are current assets. So what will be the normal operating cycle? Generally, it is expected to be realized. Normal operating cycle, which is nothing but generally we are taking for 12 months. If you are unable to identify what is normal operating cycle, so generally it will be considered as 12 months. Okay. Or second point, no? It is expected to be realized within 12 months. It is expected to be realized within 12 months. That means, so this you can realize into cash. This can be realized into cash within 1 year. Within 12 months, you are converting that material into cash. So such kind of assets, we call it as current assets. Okay. And the third point, it is held for the purpose of trading. Is nothing but it is held for sale, buying and selling of goods, that we call it as trading. So those are the current assets, is held in the business for trading purpose, not for using it in the business. We are using that for trading purpose. So then it will be a current asset. And what might be the current assets? Last point, Nana. Cash is a current asset, which is already in the form of cash, and cash equivalents. Cash and cash equivalents. So cash and cash equivalents are the current assets. So here cash and cash equivalent, one exception we are having. So cash and cash equivalent, unless generally cash and cash equivalent is a current asset, unless the asset is restricted. The asset is restricted from being exchanged or used to settle a liability. For at least 12 months. After the reporting date. Okay, Nana. So here cash means, cash equivalents means is highly liquid marketable instruments. Highly liquid marketable instruments means, so the fair value, it is not changed significantly. Whenever you have much cash, whenever you have more cash, you can purchase that marketable instruments. When you want the cash, simply you can sell that marketable instruments. That means you're keeping your cash in the financial instrument, marketable instruments, that we call it as cash equivalents. As a cash equivalents, already you know that certificate of deposits, treasury bills, these all things will comes under cash equivalent. So either cash or cash equivalent is a current asset. But if you kept that cash aside to pay off the liability in the future, okay, for example, to the creditors you have to pay cash. So you restricted some cash amount, for example, 70,000 rupees creditors I have to pay. I have to pay 70,000 rupees to the creditors. So I kept some cash aside to pay off the creditors. So what is a restriction is there? Yes. Then it will be not your current assets when, Nana, at least if you hold that restriction for 12 months after the reporting date. After the reporting date, after the last balance sheet date, 12 months if you hold, 12 months if you hold the cash to pay off the creditors. That means after 12 months I have to pay to the creditors. Now only I kept aside of some of the cash to settle the liability. Okay. Now this cash is a restricted cash. Restricted cash. We cannot use for any other purposes. In that condition, it is not your current asset. It is not your current asset. Simple, you can see that cash and cash equivalent, unless the asset is restricted from being exchanged or used to settle a liability. So either you are exchanging that cash or you are using that cash to settle the liability for at least 12 months. If you restrict that for at least 12 months after the reporting date, after the balance sheet date, if you hold it for at least 12 months, then it will not be considered as current assets, unless that remaining all cash and cash equivalent were considered as current assets. So that is about the thing. So current assets means we need to have the 4 elements. When you will say it is current asset means it is expected to realized or consumed or sold within normal operating cycle. Within normal operating cycle, if you realized into cash or if you consumed in the organization, or if you are selling the finished goods into the market, then it will be your current asset. Second one, it is expected to be realized within 12 months, within 1 year. Okay, it is a short term purpose. So within a no period of time, within a 12 months, what you are doing, you are realizing into cash. In that conditions, it is your current asset. And next of all, this is important thing, it is held for the purpose of trading. For trading purpose, if you held, then it will be your asset. Then it will be your current asset. Simply Nana, what we are talking about the things here, it is held for the purpose of trading. It is held for the purpose of trading means, in simple language, furniture dealer. Furniture dealer is there. Furniture dealer, furniture is goods. It is the purpose for trading. He is not using that furniture for his own purpose. For car dealer, car is the goods, but we purchase the car, it is asset for us. If we purchase the furniture, it is asset purpose. That means here, when you are purchasing the car for using for your domestic purpose, it is not a goods. It is not for the purpose of trading. It's the purpose of using for our domestic purpose or private purpose. Understand the point? Yeah, that is the difference, Nana. Furniture is an asset or goods means, for furniture dealer, it is goods, and for us, it is asset. For car dealer, cars are the goods, and for us, it is asset. That means for car dealer, they kept the cars in their factory for the purpose of trading. So those are the goods for them. That goods will come under current assets in a simple way. Okay. And cash equivalents. So cash and cash equivalents, ultimately it is the current assets because it is already in the form of cash, and you can realize it into easy marketable situations. Simply cash equivalents are there. In the marketable securities, you invested some cash. Whenever you want, you can sell that securities, you can realize the cash. Okay, unless such assets are being exchanged or used for settle a liability. So that means you're having some amount of cash that you invested in some marketable securities, and you kept that marketable securities for 12 months because you have a purpose. What is that purpose? In future, I have to settle a liability. So you kept that instrument for some long period. If it is more than 12 months after reporting period, then it will not be considered as cash and it will not be considered as current assets. It will not be considered as current assets. So that is the thing, Nana. 4 points. If all the 4 conditions are satisfied, if all these 4 conditions are satisfied, or any of these 4 conditions are satisfied, we can say it is our current assets. If all these 4 or any of these 4, okay, clearly we are talking about these 4 conditions. Other than these 4 conditions, remaining assets are non-current assets. Other than these 4 conditions, if any assets are there, that assets we call it as non-current assets. Okay. So next, here non-current assets we are talking about, which is simply current assets means we know the definition as per our Companies Act. So while coming to what are non-current assets means, the assets which are not current assets, the assets which are not current assets, all are non-current assets. Sir, which are not current assets, how can you define? Because current assets means these 4 conditions I have to satisfy. If any of the 4 is not satisfied, then it will be your non-current assets. Clear, ma'am? So in the non-current assets, we have different types. Already you know some of the elements. Tangible assets we are having. Intangible assets we are having. And third one we are having wasting assets. Wasting assets. Sir, what is wasting assets? It is nothing but we can say the mines, quarries, okay, all the natural resources, such kind of assets. If you have a leased any mine from the government, it is a wasting asset. It is a wasting asset. Wasting asset is nothing but so natural mineral resources and all, whatever the thing, the quarries, mines and all comes under wasting assets. So here, tangible fixed assets and having intangible fixed assets or wasting assets. If it is tangible assets, we have to apply Ind AS 16. This is important thing. So we are using Indian Accounting Standard 16 for which type of assets? Tangible assets, tangible non-current assets. Okay. So tangible non-current assets, we are using that Ind AS 16. This is our concept. And for intangible asset, we have a separate standard called Ind AS 38. Ind AS 38 we are having for intangible assets. For tangible assets, what we are having, Nana? Ind AS 16, property, plant and equipment. property, plant and equipment. For intangible assets, what we are having? Ind AS 38, accounting for intangible assets. Accounting for intangible assets, Ind AS 38. So for wasting assets, any other standards are there? Yes. For wasting assets like mines and extraction of minerals and all the things, we are having a separate standard called Ind AS 106. Ind AS 106 that we are having. Ind AS 106 that we are having for wasting assets. Okay. So we will discuss intangible assets and wasting assets when we are discussing about 38 and 106. So at present, your syllabus in CMA final, we have Ind AS 38, we don't have 106. Okay. We kept aside our major topic. Right now we came into Ind AS 16. Now we understand the point. Ind AS 16, what are the assets will come other than current assets? That will be a non-current asset. So that will be discussed here. For tangible fixed assets. Simply Ind AS 16 deals with the tangible fixed assets, tangible assets. Clear, ma? So now, so we'll discuss about Ind AS 16 right now. Okay. So Ind AS 16, which deals with nana property, plant and equipment. Okay. So we can take out an example to understand it better. Okay. So for example, one company called X Limited is there. X Limited. X Limited is a company and which is a logistic company. Logistic company. X Limited is a logistics company. Logistics company means the transportation services they are providing. So X Limited is a logistic company. X Limited purchased one land. X Limited purchased a land and a building, we can say. X Limited purchased one land and building, and they're using this land and building. X purchased a land and building, and they're using this land and building as a corporate office. X purchased a land and building. X purchased a land and building. It is a logistic company, and they're using that building for corporate office purpose. Corporate office purpose for logistic companies. So that means, so the logistic operations, we need one corporate office or head office. They're using this building for corporate office purpose. So then this corporate office, this building, we can consider as property. This building will be considered as property, and this property we have to apply Ind AS 16. Why we have to apply means, see here, when X Limited purchased a land and building and they're using it for corporate office purpose, for the business purpose. They are using it for which purpose, Nana? Business purpose. For business purpose, if you purchased an asset, then Ind AS 16 will apply. Then Ind AS 16 will apply. So that means here there is a condition that in order to say it is your property, plant and equipment, Ind AS 16, which is nothing but property, plant and equipment. When you can say this asset is your property, plant and equipment means, for example, so here we are having one asset should be a tangible nature. One asset should be a tangible nature, first condition. Second condition, the asset should be used in the business. The asset should be used in the business purpose. So either you can use it in the production process, either you can use it in the administration process or selling and distribution process, whatever the thing. Usage of the business means for any purpose you can use. One asset for any purpose you can use. Okay, so here that is the thing. So, and you're using that asset and the life expectation of that asset should be more than 12 months. Three conditions should be satisfied. So, what are the three conditions? So, here, first condition, it should be tangible. What you meant by tangible, you know that, which can be seen and which can be touched. The physical existence should be there. It is tangible. Second condition, held for use. Held for use, not held for sale. It is held for use in the production process or administration process or selling and distribution, anywhere in any department. If you use the asset in the production department, HR department, administration department, selling and distribution department, Anywhere when you are using for your business purpose, that should be the second category or second criteria. And third one, the life expectancy is more than 12 months. Okay, the life of that asset should be more than 12 months. If all these three conditions are satisfied, then it is your property, plant and equipment. That is your PP. But the point. So that is the thing. So that we will discuss it later. What is the definitions and all. Here you have to tell me that X Limited is a logistic company. Logistic company means what is the logistic operations they have to do, transportation services they have to do. Okay. For that, they want one corporate office. Okay. So for that, they purchased one land and building and they are using that land and building for a corporate office. Then here land and building is a property. It will comes under Ind AS 16 means yes, it will be comes under Ind AS 16 because they are using this property for business purpose. They are using this property for business purpose. Next, Nana, same X Limited, which is a logistic company, purchased land and building, and they are giving this land and building for rent, for rental purpose. Rental purpose. They are not using for their company purpose. They are not using there for company purpose. The rental purpose they have given. Okay. So that means they are lease for the lease or anything like that. They are giving this building for rent. They are giving this building for rental purpose. In that conditions, what we can guess, Nana? See, here we are investing the land and building for what? For rental purpose, not for the business purpose. In that conditions, this property of land and building, what we call it as, this property is not property, plant and equipment. It will not comes under Ind AS 16. Ind AS 16 will not apply because it is used for rental purpose, which is not our company is a rental business. For example, my main business is not logistics company. My main business is not logistics company. Instead of that, my major business is giving the buildings for rent. In that condition, that is business purpose. Now here, my company is a logistic company, but the purpose of logistics means transportation of goods and services. But what I did here, one land and building I purchased, and that one I kept as for rental purpose. Okay. So in that condition, this property we call it as investment property. Investment property, because you are not using for your business purpose, you are using this for investment purpose. Because of that investment, you are receiving the rent. So this investment property, we have a separate Ind accounting standards, that is Ind AS 40. Ind AS 40 deals with investment property. Ind AS 40 will deals with this kind of arrangements. Okay. Ind AS 16 will not apply because that property is not used for business purpose. That property is not used for business purpose. So that Ind AS 16 will not apply when you are using the property for investment property or you are giving that property as for rental purposes. Got the point, Nana? If my company is not a logistic company, my company is a company that giving buildings for rent. My major business is giving buildings for rent. In that conditions, if you give any building for rental purpose, that is your business. That is business purpose. Then Ind AS 16 will apply. So here, if any company which is not used the properties, which is not used the assets for their business purposes, in that conditions, Ind AS 16 will not apply, and that is an investment property though, so it will comes under Ind AS 40. Ind AS 40 rules will apply. Okay, so that is the meaning you want to understand that. Okay, now coming to the objective of Ind AS 16. What is the major objective? What is the major? From here we will start the major topic. What is the objective of Ind AS 16 means? First of all, you have to identify the asset or recognize the asset. Recognize the asset. So which one comes under PPE 16? Okay, you have to recognize the asset first. Next, you have to determine determine the depreciation charges. As I told you that, so here Ind AS 16 will apply for assets as well as depreciation also. Depreciation separate Ind AS we don't have. Ind AS 16 itself, depreciation aspect also there. So first of all, you have to recognize the asset and we have to determine what is the depreciation on that particular asset. Okay. After charging depreciation, whatever the amount you are getting, that we call it as carrying amount. Okay. In our old language, we call it as book value, but in Ind AS language, we are calling as carrying amount. Carrying amount is nothing but a balance sheet value, no, book value only. For example, 1 lakh is the asset, first year 1 lakh is the asset, 10,000 depreciation. What is the book value? What is the balance sheet value? 90,000. That 90,000 only we are calling as carrying amount. Carrying amount. So determination of carrying amount. Determination of carrying amount. And fourth one, determination of impairment loss. Okay. So what is impairment loss? We will discuss that. Impairment of assets, we are having a separate standard, Nana. Ind AS 36 we are having. Ind AS 36 we will deals with impairment of assets. There we will discuss a lot of things relating to the impairment. But why in the property, plant and equipment means a small part we are having in Ind AS 16 also relating to the impairment loss. What is the major objective of the standard is that recognition of asset and recognition of depreciation charges and determination of carrying amount of that asset and determination of impairment loss. Determination of impairment loss. So what is impairment loss? That we will discuss it later. Okay. And coming back to the scope of the standard. This is the objective, Nana. We will discuss each and every element in detail later. Okay. So that outline that we are going to discuss here and scope. Scope of Ind AS 16. Scope of Ind AS 16. So scope means simply we can say the scope of Ind AS 16 is nothing but which one comes under the scope of Ind AS 16, which assets are comes under the scope of Ind AS 16. So moreover that we will see which are not applicable for Ind AS 16, which are not applicable, which assets are not applicable for Ind AS 16, that we are going to discuss. Okay. So first of all, first one, non-current assets held for sale. So non-current assets are not held for sale. Generally, non-current assets are not held for sale, right? But if any non-current assets held for sale are there, that means you are not, this is not your goods. Okay, you are not a furniture dealer, but some furniture is there, you are not using it, you want to sell that asset. You want to sell that asset. For that, we have a separate accounting standard, Ind AS 5, Ind AS 105. Ind AS 105 deals with non-current assets held for sale. If any such non-current assets held for sale is there, we have a separate standard Ind AS 105 so that Ind AS 16 will not apply. Ind AS 16 will not apply. Now, any asset specifically having a separate Ind AS, so then this Ind AS 16 will not apply. Any assets having separate Ind AS, then it is not comes under the scope of Ind AS 16. Simply non-current assets held for sale. Same non-current assets held for use it in the business, Ind AS 16 will apply. Non-current assets held for sale, we have a separate Ind AS called Ind AS 105. Non-current assets held for sale or discontinuing the operations, a separate standard we are having. There we will discuss Ind AS 105, and here it will not apply under Ind AS 16. And second one, okay, no, scope of Ind AS 16 we are discussing about. Now first we are discussing about exclusions, then we will come to inclusions. Okay, it will be better to understand. So non-current assets held for sale, so we have a separate standard, as I told you, Ind AS 105, there we will apply. And while coming to the second one, biological assets, biological assets excluding bearer plants. excluding bearer plants. Biological assets excluding bearer plants are not under, we are talking about exclusions, which is not comes under the scope of Ind AS 16. So biological assets excluding bearer plants, which is not comes under the scope of Ind AS 16. That means excluding bearer plants means bearer plants will comes under the scope of Ind AS 16. Yes, bearer plants will comes under the scope of Ind AS 16. Sir, what is this biological assets and what is this bearer plants? For that, in order to understand that, we have a separate Ind accounting standard for agriculture. Okay, so we'll discuss that. Ind AS 41. Ind AS 41, the standard name is agriculture. New Ind AS, no? Agriculture. Ind AS 41, agriculture, give the definition. They gave the definition relating to biological assets. Biological assets. So what is biological assets? Okay, so biological assets means plants, animals, this all are the things. So biological assets is nothing but simply, for understanding, you can write down any living plant or animal, any living plant or animal owned by the entity. Any living plant or animal owned by the entity. Any living plant or animal owned by the entity, we call it as biological assets. Biological assets. While cattle, okay, you can see that some cows, buffaloes, okay, so that we are using. Any living plants or animals. So coming to the plants, we will discuss that. Okay, the biological assets are two kinds. So one is for plants, one is for animals. Okay, we're talking about animals. And plants. Okay, animals and plants. In the plants also, we are having two kinds: non-bearer plants and bearer plants. Non-bearer plants and bearer plants, which is nothing but, non-bearer plants is nothing but they are not bearing a fruits on it. They are not bearing a fruits on it. Example like leafy vegetables. Leafy vegetables. So any fruits that we are getting for leafy vegetables? No. So here examples you can write: leafy vegetables, or sugarcane. You can see sugarcane, leafy vegetables. These all are non-bearer plants. There is no fruit on it. Okay, so they are not bearing a fruit on it. While coming to bearer plants, here also two kinds of bearer plants we are having. Two kinds of bearer plants we are having. Only once, and per annually. So only once it will come, one time, one production. Okay, just like a pineapple. Pineapple is a bearer plant. It's a fruit. It is coming up, but only one time. Again, we have to take off that take off the tree in a simple way. Okay, examples like only once, what we will get now, like banana, pineapple, etc. Only once they are giving the fruits. Okay, so banana 2 or 3 times, whatever the things in the year. So it will not give every year, it will not give the fruits every year. Okay, so per annual, you can say examples like mango trees we are having, mango, coconut, these all are the things. Okay, so these are the bearer plants. So listen carefully. What are the things we are discussing? Biological assets excluding bearer plants. Biological assets excluding bearer plants. Okay, excluding bearer plants will not comes under the scope of Ind AS 16. That means they are excluded all the remaining assets except bearer plants. Remaining all the assets will not comes under the scope of Ind AS 16. Ind AS 16. That means animals will not comes under PPE. Non-bearer plants will not comes under PPE, and the plants which we are, listen carefully, this is a bearer plant, but only once it is giving the production, that is also not comes under PPE. Sir, what are the assets will comes under PPE then? Okay, listen carefully. Animals will not come, non-bearer plants will not come, and in bearer plants also only one time production it will not come, and per annually whatever the bearer plants we are having, per annual basis we are following Ind AS 16. Ind AS 16. Understand the point? Ind AS 16 will apply for the bearer plants. That is also per annually. Every year they are giving the production. Every year they are giving the production, that we call it as. So for example, like mangoes or coconuts or tea plantation. So one time only you are making the plantation. So it will give it for 60 years or 70 years. Every year it will give the production of the tea leaf. So these all are the conditions. These all are the conditions that we call it as bearer plants. So whatever the mangoes and coconuts or tea leaves that you are giving by that plants, that we call it as agriculture produce. Okay. So it is clearly given in Ind AS 41 agriculture chapter. So which is not in our scope of a CMA final at present. Whenever it required, I will tell you. Okay. So here you need to understand bearer plants, that is also per annual bearer plants. Ind AS 16 will apply. Ind AS 16 will apply. Other than that, it won't apply any type of Ind AS 16 for the remaining biological assets. So that is what. So some of the standards and some of the exclusions are there. So remaining things that we will discuss in the later classes. Okay. So thank you. That's the end of the session at present.